Hi everyone, in this video I'm going to share the differences between an interest-only and repayment mortgage when it comes to property investing. Starting off with interest-only, this is where every month you only pay the interest portion of your loan and not the loan itself. This means that your payments on a monthly basis will be relatively low compared to a repayment mortgage, but at the end of the term you have to pay the entire loan back to the lender that you chose to go with. So these are generally interest-only mortgages, as it says kind of on the tin, you're only paying the interest on a monthly basis. Next, we have repayment mortgages. This is where every month you pay the interest portion of the loan as well as a portion or contribution towards the capital part of the loan. This means that each month you're paying a little bit more because you're doing both the interest and a contribution towards the capital amount, but over time, slowly the amount of money that you own to the bank, that loan that you take out, will slowly go down in value. And so the mortgage in its entirety, including the capital amount as well as the interest amount, will be paid up by the end of the term. The downside here is that with a repayment mortgage, you are paying greater amounts every month, and so your cash flow is a little bit limited. With that said, most property investors actually only go for an interest-only mortgage. There's a couple of reasons for this. Firstly, you can normally offset that interest portion against your income if you purchase in a limited company, which means that you actually pay a lot less tax. So generally in property, the mortgage, the interest, is generally the greatest expense in the entire business. And so if you're able to use this as an expense to offset your income, then you're ultimately paying a little bit less tax, which means greater profits for you as a property investor. The other thing is that every pound you put towards the repayment, if you are on a repayment mortgage, is one less pound making you money through property. So if you're making 20% returns on your property investments, then you're paying off an interest rate at 5%. It doesn't really make sense because you can use that borrowed amount at 5% to make 20% in another property investment. So it's a lot better to keep it in an interest-only mortgage because you have more cash flow on a monthly basis, and that cash flow that you have can be invested into growing your property portfolio. The other part that I want to mention is that if you want to pull your money out of a deal, then putting it back into a deal through repayments is a little bit counterproductive. Because if you remortgage, you're pulling money out, but then if you're paying it back on a monthly basis, it pretty much just undoes what you would have already done. And that's why with interest-only mortgages, when the property values go up, following a refurbishment, you can remortgage and use that amount to buy more and more properties whilst maximizing your cash flow on a monthly basis. The benefit with also interest-only mortgages is that you're actually paying back the loan after 25 years, 30 years, whatever the loan is or the term is. And after 25 years, 30 years, inflation actually erodes this because the purchasing power is going to increase over time. And so, £50,000 now is a lot different to £50,000 30 years down the line. And you're better off paying £50,000 as an example in the future as opposed to now when inflation has kind of eroded it off, if that makes sense. So that's the key differences between an interest-only and repayment mortgage. Hopefully that answers some questions that you might have. Thanks. Bye-bye.